I think the overall picture is slow, steady growth, much like the national economy in terms of Colorado's recovery, sort of following that path. We would all like more rapid recovery, especially in terms of jobs, but we're just not going to see that. Storyline really relates to why is it such a slow growth path, and we really focus that on really two areas that are particularly important. One is construction. And the construction industry will continue to lose jobs in our estimation, and that really has had a big impact throughout the entire downturn and continues to impact in 2011. But the other one is kind of an interesting one. Government sector, we have projected overall to lose jobs for the first time since really those kinds of records were kept in 1990. Pretty much every year, the combination of state, local, and federal employment combined has added jobs. One piece might be down, but the total has been positive. And this year, we actually have that detracting from job growth in Colorado. So those two pieces are sort of the storyline of why the growth rate is weighed down over the next year. Actually, Colorado lagged the national recovery and went into the year anticipating or hoping that it would match the national recovery, because we do have several sectors that are sort of in sync with a national recovery. But a couple of other sectors really overpowered. The positive growth was overpowered by some big negative numbers in construction in particular, and really kept the Colorado economy at a pretty slow pace. And so we went in thinking we'd be in the top 10, 15, 20 states. We came out of the year actually in the bottom 10. So overall, when we talk about the Great Recession and what its impact has been on the Colorado economy, it certainly has had an extremely negative effect. From peak to trough, we've lost over 6% of employment in the state, depending on which estimate we use, and significant amount of jobs in many sectors. And in 2010, we didn't see the recovery that had been anticipated. So in 2010, Colorado really, from an employment perspective, lagged the recovery, even though the national economy is out of the recession. Have we seen other areas that have grown? Certainly. We've seen a rebound in retail sales, for example. We've seen a rebound in tourism sector in terms of occupancies and room rates. We've seen lots of rebounds in output. We just have not seen the rebounds in terms of the employment numbers. I think you have several components that are leading to slower job growth as we come out of this recession. First and foremost, the recession was a financial recession as opposed to what we call a real economy recession. So typically we've got into business cycles or downturns and we've overbuilt too much investment or some other piece, and it kind of led to a downturn and then a recovery that was relatively rapid, and not particularly deep downturn and not particularly rapid upturn. This particular recession, and there's only been a couple on record, like the Great Depression, was very much a financial recession. Financial markets kind of exploded, bubbles burst, and we went into a deep downturn that was not just the real economy, housing and jobs, but also the banking sector and the financial economy. It takes much longer for financial recessions to heal. They're much slower. You need to get the whole finance sector up healthy and then lending again. And as we've seen, we're out of the recession for a year and a half now, and we're still not seeing lending back at pre-recession levels or even close to pre-recession levels. We're seeing banks still being very reluctant to lend money. So when we look at the overall picture, that's really the number one piece. I think the second piece, and it shouldn't be understated, is that we're going through a structural change in the economy overall. During this downturn, which is somewhat typical, businesses don't add employees. They try to figure out how to do more with less till they're sure their profits are up and they're sure that their balance sheets are shored up. And so they become more productive. Productivity surges in the economy, as it has throughout 2010. And until that productivity number actually goes down and the companies need more workers, you don't start to see significant hiring. We've seen tremendous investment in capital in the economy in the last year and a half. Incredibly low interest rates, good tax breaks. Companies are buying machines as opposed to hiring people. And while in the long run this is great for the U.S. economy, being more productive and doing more value added, in the short run it's very painful when you have high unemployment rates. I think that's a second really significant piece in terms of the recovery. Well, it's extremely important to look at the national factors. I would tell anybody that first thing they should be looking at is top line. How's the country doing? Because it's going to be very difficult for Colorado to have a above average year unless the national economy really breaks out. We're assuming no double-dip recession in our forecast, slow, steady growth of the U.S. economy trending up to 3% plus GDP growth by the end of the year. And so that's the background. That's number one. Secondly, I would say pay some attention to the winding down of the stimulus as that continues to go down over the next year. What kinds of negative impacts perhaps is that having on the economy as we look forward. So nationally, pay attention to Washington as well. What political changes are going on in terms of changes in tax rates, changes in healthcare policy, the types of things that we know are getting debated and heavily argued, if you will. So nationally, there are lots of keys to look at, if you will, when you're sort of reading the performance for the next year. In terms of the state, I think it's a really interesting situation, especially with the government situation being what it is. As we go over the next year and phase into the second part of the year, we're going to have additional budget cuts to think about. So those are going to be really key issues. And then in a sort of broader context, how does the energy sector do? What happens to commodity prices and energy prices in terms of going forward? So the key sectors in terms of job growth for 2011, one would be professional and business services. It's still going to be the largest job generator, a strong sector in terms of high wages, relatively high wages, and that's one of the keys. In addition, we expect to see job growth in leisure and hospitality, education and health, that's private education and private health, and trade, transportation, and utilities. All of the job growth in all of those sectors is really subpar in kind of a historical context. Not enough to bring down the unemployment rate in any meaningful way, not enough to really create great momentum in the state economy, but at least moving in the right direction. In terms of, when does the hiring occur, I think in some of those sectors it's already occurring. They're already on a positive trend in the end of 2010, and that will continue throughout 2011. Just at a slower pace than historically and frankly a slower pace than we would like.